The Beef Market Update on RealAgriculture.com with Ann Dunford is brought to you by AFSC's Cattle Price Insurance Program, Haney Farms, and Gateway Livestock Exchange. And we've seen the cash price push higher along with the fat cattle futures. Is this sustainable at this point?
Well, I think one of the things that I think you better pick up in this kind of a market, Sean, is yeah, we're into some new price highs for 2010. Prices are strong. Futures going into 2011 are higher yet. In April 2011, flirting in that 109 mark last week. And these kind of prices have got everybody talking, lots of bullish talk. But I think one of the key things, and we've learned this through 2010, and I think we better remember it going forward, is these kinds of levels, and when you start getting global impacts happening, we got lots of volatility. And so what you see today could be gone tomorrow. It might come back again. But I think in this environment, there's no, one of those quotes I heard last week from an economist, which I shouldn't quote an economist, but there's no perfect predictions. This kind of market is going to give us opportunities, lots of volatility, but if you sit back and do nothing, Sean, I think you could be spelling yourself up for disaster.
So, Ann, with all this volatility, whether it's on the sales, the sale price of fat cattle, or on some of the costs and the inputs, risk management just seems to be the case going forward.
Well, that's right, and that's kind of what I was referring to when we talked about volatility equals opportunity. So you need to take advantage of this, and I'm not just talking about price volatility and price risk. There's the whole cost of production side, and of course the whole other side of the coin here is just how strong do these grains get in 2011. So if you're looking at purchasing livestock inventory today, should you not also be looking at some kind of risk management on the inputs, especially on the feed side? So I don't think there's any no-brainers in this market. A guy's got to be very, very astute in regards to managing his risk going forward.
But don't you? The price of feed grains, obviously there's a cost there and there's a risk. But don't you think traditionally, if you look back, isn't the real risk is that feeders go out and pay more for the placements than they should, based on the good prices that are out there?
Well, that is one of the things that happens. But again, we've just come through 8 months of profits out of the past 11 in the Alberta cattle feeding industry on average. That's according to Canfact's break-even analysis. So we've got an industry that's made some money, maybe not a lot, but on average has been profitable, and he will chase feeder cattle as we've seen today. But I guess the next side is, do you just completely just stop there and not do anything about the cost side? So that's what I'm suggesting is, we've already bought the feeder cattle. You argue as much as you want, right, wrong, or indifferent, too high, too low, whatever. I'm just saying that you need to also be looking at the cost side.
Well, it would seem that a lot of people are taking advantage of these higher prices. We are very current.
Absolutely. I mean, from a seller's perspective in this cattle market, whether you're here or whether in the U.S., we've been selling into this very aggressively. We've had a basis situation where the cash has stayed strong, so there's been no reason not to sell cattle. So we're very current. Gives us very good leverage, but again, can you bank your laurels on us staying that way forever? Nothing stays the same forever, Sean.
Well, and that's, so when you pound the numbers and you really look at it, what is your expectation from this point forward?
Well, again, we could have had this discussion a year ago, and from a supply perspective, Sean, numbers are bullish. They have been for some time now, but it just seems like we get hit from one side or the other with something else happening. Followed 2008, it was recession, and then we have a demand failure, and so every time you turn around, there's something. So I don't know what the next something is going to be. Right now, the skies are very sunny on the supply side. Demand is better. We've got Canadian beef exports in 2010 up 10%. The U.S. is up as well, so we're moving more beef out of North America. We hear more trade deals talked about all the time. So things are looking brighter on that side. But again, to rest your laurels and expect that that's just going to be like that, I think it would be very short-sighted.
So exports are doing quite well. What about domestic demand?
Well, one of the charts I saw last week by, again, one of the economists that was talking about U.S. food service business this year versus last year, same-store sales most certainly up. The U.S. food service industry has most certainly turned. Have they gotten back to where they were before the recession? No, but they've turned the corner. Most certainly, the data looks promising. And remember that that's where we sell a lot of our high-end products is through restaurants. So food service traffic is important to beef producers. So it has turned the corner. Is it where it was? No, but it's most certainly on its way back.
But what's interesting about that, even last night I'm watching 60 Minutes and they're talking about how, the US economy is just really, really slow and trying to get back recovered. Why has demand turned the corner?
Well, I don't think it's completely turned all the way through all the sectors, and you're right. We still had an employment report last week that showed numbers are still most certainly on the high side. So we haven't got U.S. consumers back to work to the kind of numbers we'd like to see, but between some better food service business, some better export business, we are taking slow steps forward. Not full recovery, but most certainly slow steps forward. So we've got a long ways to go, absolutely. When you've got 10% of the U.S. population unemployed, it's not a number to be proud of. So that's the kind of data that we still need to see turn around, and it looks like we're on a slow track, as you mentioned.
Yeah. Okay, Ann, thanks a lot, and we'll talk to you again next week.
Okay, good, John.